Great. Good afternoon, everyone, and a very warm welcome to all joining us today. Thank you for taking the time. On behalf of Global Transfer Pricing Network, I'm Anand Vemuganti. I'm pleased to moderating today's session. The session is a part of our ongoing webinar series on transfer pricing certainty framework, and is a second edition following our discussion on India's revamped Safe Harbour regime strengthening the transfer pricing certainty. Building on that, today we take the conversation forward to focus on advanced pricing agreements in KSA, South Africa, India, UAE, and Maldives. As transfer pricing regimes continue to evolve, globally, there is a clear shift from a traditional audit driven approach to more proactive, certainly led framework where APIs are increasingly becoming a key tool for managing transfer pricing risk, particularly in complex cross-border transactions. Today, we wanted to highlight these topics and also provide some practical insights. Let me quickly introduce our esteemed speakers for today. We are honored to have with us Mr. Kuldeep Sharma, our mentor and senior advisor at GTPN, as our speaker. Mr. Kuldeep is globally recognized expert in international taxation and transfer pricing, with over 30 years of leadership experience across government, consulting, and global policy institutions. An ex-IRS officer, he served as a Joint Commissioner of Income Tax with the CBDT, handling policy matters relating to non-residents, APAs, MAPs, and BEPS, and treaty negotiations. Later, as a research consultant at tax at the South Center, Geneva, he worked with the UN, UNDP, ETAF, and WTAF, providing inputs to the UN Committee of Experts and advising governments across Asia, Africa, and Latin America. A prolific author and a thought leader, he brings in a unique blend of policy insight, a practical advisory, and technical depth, making today his perspective especially valuable for today's session. And second speaker is my partner Praneeth Narahari, a global transfer pricing and structuring advisory leader at GTPN. He brings over 12 years of experience in transfer pricing and international tax, having advised clients across 30 plus countries. He specializes in cross border restructuring, policy planning, and dispute management, with a strong focus on practical and defensible solutions. And last but not least, we have Sarmad. Sarmad brings in close to 2 decades of experience across North America and Middle East, specializing in valuations, financial transactions, and transfer pricing policy design. He has previously led transfer pricing policy for global financial institutions, advising multinational groups on intercompany financing, IP structuring, and valuation of complex financial instruments. Finally, briefly about myself, I lead the tax technology practice with the GTPN, helping align tax strategies with broader commercial and operational objectives. Before we begin, just a quick housekeeping note. This is an interactive session, so please feel free to share your questions in the chat or comment section. Further, we have already received few questions before the session, and we'll take them up live during the webinar as we progress. We would like to thank Voice of CA for the technical support. Without further ado, let us get started. And I give the stage to Mr. Kuldeep Sharma. Over to you, sir, to provide your insights on the global APA framework and comparison on the today topical highlighted countries. Over to you.
Thank you very much, Anand, for your warm introduction. And a big hello to my fellow esteemed speakers as well as the participants. So, as Anand has described, I have been involved in APA program for India for about 8 years. And during this process, I was able to garner experience from the perspective of APA teams as well as from the perspective of CBDT while granting approvals. Now, coming to the slide, I think this slide very aptly captures the entire gist of how disputes turn into certainty. And I think I have a dictum ready at hand to describe this slide. And it is that if transfer pricing is an art, then an advanced pricing agreement is a painting. Now, how will I'll now describe how this fits into this slide. as we all know, transfer pricing is not an exact science, it's an art. The taxpayers do their own FAR analysis, comparability, and identification of comparables, which they perceive is correct. Whereas, on the other hand, the tax administrations sometimes take a different point of view. So, that is why on the right hand side, you see in the pie chart, a lot of litigation is happening, and surprisingly, tax administration is winning. So this gives a broad indicator to taxpayers that instead of getting into lengthy litigation through taking the route of tax audits and then consequent litigation, it is better to go for dispute prevention, which is available in the form of APAs. So in APA, the same transfer pricing principles as are applied in the TP audit purposes, they are applied. The negotiations happen between the tax administration and the taxpayers in a very collaborative manner. And they finally reach a conclusion as far as the FAR is concerned, as far as the pricing of the transaction is concerned. With the result, an agreement is signed. And this is how the art form, which is ingrained in the transfer pricing application, gets converted into a painting in the form of an advanced pricing agreement. So, as we have seen in this slide, there are it depicts the kind of transactions which are generally covered in the TP litigation. This is a broad overview, and on the right-hand side, we find that litigation is uh, gets carried on to the highest level as well, where the tax administration generally wins. So, better recourse is to have prevention and in the form of APAs. Next slide, please. So APAs give lot of benefits. Apart from tax certainty, they prevent double taxation, and and in the process they help free flow of trade, technology, and transfer of investment from one country to another. So in a way, APAs are now being used as governments as a tool for ease of doing business as well. And this is an important feature which we find in most tax administration nowadays. Uh, in the Middle East, the process, APA process, is beginning to take off, whereas in the matured countries where the APA program has been rolled out since late 1980s, it has yielded brilliant results, and taxpayers are taking advantage of the APR program in a big way. In the bottom part of the slide, we have provided some APS statistics as available on the OECD website. And you will find that unfortunately, the duration of completion of APS is increasing. Whereas, and this is also visible from the start of inventory in 2024, when the opening pendency was 4,082, whereas at the end it had increased to about 4,200. So this indicates that somewhere, though this is a composite figure of all the countries where the APAs are in have been rolled out. So some countries may be performing better, but in some countries, the APAs are taking much longer to materialize, and this can be a cause of concern for both tax administrations as well as taxpayers who want to go for the APA program. And in the future slides, my colleagues will be discussing how this bottleneck can be taken care of. So this slides, the beauty of APA program is that the procedures and the process is more or less uniform. So in the top end of the slide, it depicts the uh, transaction or the APA flow as far as the taxpayer or APA applicant is concerned, as to what steps he the applicant needs to take while taking up the APA route. Whereas at the bottom slide, it shows the process through which the APA application goes, right from the pre-filing stage to the agreement stage and the compliance stage. So within this APA life cycle, an important feature which is very prominent and unique to the APA process is the process of site visits, where the tax administration officers, while keeping the taxpayers or tax applicants or APA applicants informed that they are coming to visit the premises of the APA applicant, where their objective is to basically ratify the all the TP documentation and the details that have been filed during the APA process, and they go and visit the premises, talk to the top management of the company, and this is basically a confidence building exercise for the tax administration to gain deep insights into the case. And in my experience, site visits have been a major trigger or facilitator in quick finalization of the APA cases. Here I can give one practical example as to how, as a part of a APA team, my vision about a case improved during the site visit. Without citing the name of the case, it was a manufacturing company, and it used to manufacture a product. But the operation of the plant, as was described to us during the APA process, was that it was being monitored and in some way controlled by the parent company resident outside India. To us, initially, it seemed very awkward as to how a plant functioning in India can be monitored and controlled outside India. So during the site visit, the top management of the company described us, showed us as to how it is being done. So this is how the site visit facilitates a quick understanding of the case for the APA team and helps in early finalization. Next slide,
Uh,
please.
Yeah, Mr. Kuldeep, just one point here
Yeah,
is
yeah, yeah.
we have few questions received. I think this is probably an apt question to ask you from your experience.
Okay,
What are the
okay,
most common reasons for API applications being rejected or not concluded?
okay. So one could be that some kind of projection or kind of an intent which the APA applicant gives to the tax authority, that based on this premise, the APA application or the agreement may be signed, but the APA team may have a different vision because of, first of all, the facts of the case. Secondly, the on-site visit, when they visit the premises, they sometimes gather a different insight of the case than what is actually described in documentation. And thirdly, to my mind, is the optimistic expectation of the taxpayer sometimes to sort of garner as much lower margin of a transaction which perhaps a particular case does not warrant. So this disagreement most of the times is the cause of a case not getting approved by the tax authorities.
Thank you for that insights. I think the next slide is quite interesting on the country API comparison. Please go ahead.
Yeah, thank you, Anand. So, another feature of APA program is that, as we have seen in the previous slide, the APA process is generally the same, barring certain differences which the GTPN team has highlighted in this slide, specifically for these countries mentioned here. And these differences are very routine. For example, some countries initially may go only for UAPA and not for bilateral till their APA process gets settled down, or they may necessarily go for pre-filing, which I think is very important to for both the tax administration and the APA applicant to get conversant with each other. Then some governments may ask for APA filing fee, whereas others may not. And another important aspect is of inclusion of rollback years. So some governments allow for inclusion of rollback years. Even the number of rollback years may vary. For example, in India, rollback years are for 4 years, whereas in China it is for 15 years. So this difference may also be there from country to country, and it is always better for APA applicants to take the assistance of experts before going in for a particular APA application for filing an application in a particular country. So far as this slide is concerned, as I have just overall explained, in the UAE, presently only unilateral APA is available till the system stabilizes. They have set a threshold of the transactions above which only the APA will be undertaken. The government has prescribed some fee, and there is some validity so far as the forward and the backward years is concerned. In the case of Kingdom of Saudi Arabia, it again applies only UAPA currently. Again, they have set some minimum threshold of transactions which can be taken up for APS. There is no filing fee, and the APA is only for prospective 3 years, not for rollback. And of course, post signing of the agreement, there is a common requirement of compliance which is required from the part of APA applicants to satisfy that the various terms and conditions and critical assumptions of the agreement have been fulfilled or not, which is very important. In India, a lot of reforms have recently happened, which my colleagues will discuss going forward. Here, all kinds of APAs are available, and there is no threshold in terms of quantum of transaction, and a separate filing fee is required for forward-going APA years as well as rollback years, and it is available for 5 prospective years and 4 rollback years. In South Africa, it's still in the pilot stage. My colleague Anand will describe more about South Africa. He is an expert, having worked there for so many years in South Africa. So we have left this part to him. I'll go to Maldives now. So in Maldives, again, they have recently introduced APAs in 2021. The program has yet to take off meaningfully in that country, but as for GTPN, we are available if some kind of service is required from our end to take up any APA matter in Maldives. So there again, there is no threshold in terms of quantum of transaction, but some fee is chargeable, and APA is for a duration of 5 forward years, whereas rollback is permissible on case by case basis. So with this, since we are in this program, we have confined ourselves to these 5 countries only. So this is how the APA program is going to happen or is happening in these countries. And of course, as I mentioned earlier, since the common feature of the APA is universal, so similar principles, though changing from country to country, may apply in other countries as well.
Thank you, Mr. Kuldeep. I think we have to hold you for a minute more because we just
Yeah.
got one more important question. In your experience, what critical assumptions impact the validity and continuity of an APA? Because that's something that really audience wants to understand that.
So critical assumptions are very unique to a particular case. So they may be, some of the conditions may be common for a particular industry, but otherwise they are very unique. And most of all, the most important criteria is that the FAR, which has been agreed in the agreement, that has to be that has to consistently remain throughout the agreement. If there is any change in FAR, then that can be taken as if the agreement has been impinged. So this is the most important criteria, and of course, maintaining of margins, that is also an important yardstick to see whether the APA agreement is being fully complied with or not.
Thank you, Mr. Kuldeep, for the insights. I think moving on, I think the next topic would be the topical TP audit issues and API insights. And Praneeth, my colleague, will be taking up on this.
Thanks, Anand. Good afternoon, everyone, for tuning in today. Uh, I think I have to thank Kuldeep sir again for excellent insights and setting a strong context for our ensuing discussions. On this specific slide, the objective is to highlight how transpricing approaches differ in a domestic litigation setting vis-a-vis the APA route. Uh, it's mostly influenced by the end objectives. If you see in a transpricing domestic litigation, the intent of tax authorities is to identify gaps or validate the transpricing positions of multinationals. Again, they operate within the four walls of transpricing frameworks. There's a lot of influence of judicial precedents. The outcome mostly lean towards being pro-revenue to make transpricing additions. But on a flip side, when you see the overall APA framework, since the end objective is to provide that tax certainty to the taxpayers, there is room for more discussion, negotiation. Thereby, the tax authorities not only look at plain vanilla methodologies or models, but also give more weightage to business realities, the market conditions, and the industry expectations, so that there is a positive as well as optimal conclusion. So, with that brief, I just want to explain, taking few critical transaction categories, which are highly litigated as well as mostly covered in the APA frameworks across the jurisdictions. First is on the intragroup services. All the countries we are touching today, be it KSA or UAE, where we have a lot of regional headquarters established, even for that case, South Africa, which is kind of a regional hub for Africa region, and of course, India being a shared service center for a lot of multinationals. This is almost a critical transaction in any M&E setup. In a TP audit scenario, the chargeability is looked beyond ALP test, where they also dwell into need benefit. Mostly the end outcomes are there either uh, complete disallowance of entire expenses, or they question the characterization of the transactions, be it high value, low value, share, chargeable or not chargeable, depending on whether there is any need benefit accruing to the taxpayers. At times they dwell in detail, look at the entire cost pooling, cost allocation, and also question the allocation case, because they see it as tax planning as a repatriation strategy. There is a lot of radar in domestic litigation on both intragroup services and royalties. But when you come to APA, they look at profitability analysis. What are the net margins before and after such payouts? They need not look into comprehensive evidence package, but on a sample basis. There's no questioning around quantifying that benefit or need. They just see if there is actual rendition or actual benefit accruing to the beneficiary entities. In terms of the outcomes, they give a cap on these repatriations, often linked to either revenues or profitabilities. Therefore, the outcomes are more rational. On the next transactions, intangibles again. This is favorite topic of Sarmad. He will touch base on this when he's discussing on his slides. But again, here taxpayers mostly aggregated under TNN method, or in some cases use cup methodology. Again, need benefit test is always questioned. The adjustments are either nil adjustments, meaning entire disallowances. However, in APA, they look at trend analysis, how your revenues are increasing or the profitability is increasing based on this exploitation of either tech or product intangibles. There are cases where they allowed these royalty payments even in loss years, because royalties are generally plugged to percentage of sales, right? So if there are no sales or if there are losses in the initial years, they have been open enough to allow certain baseline royalty payments, provided there is a correlation in the trend analysis in the forward years. On the purchase and services, the main audit issue has been on the characterization, TP profiling of the entities involved. Again, tax authorities being pro revenue, they try to characterize these entities either as principal or entrepreneurial entities, thereby warranting higher margins or markups. Uh, and again, method selection is more critical. They go with default 10N approach, irrespective of the characterization or the business profiles of the entities, because the net profit has been starting point of the tax computation, right? So they don't look at either price level or GP level. They are always inclined to looking at a net profit level, which is not ideal in all the cases, especially based on the underlying facts and circumstances. However, based on our experience in APA, they are more open. While TNNM again has been a go-to method, even in APS, the certain cases where they might look at PSM, not as a going in strategy, but as a back of the envelope calculation, just to distribute these routine returns with the for the routine entities and also see how residual can be allocated between the principal, entrepreneur, or IP holding entities. All in all, the what I want to highlight here is the impact of the litigation trends or a rigid approach of being pro-revenue is not seen in APA. They're more open as long as the taxpayers are proactive and providing submissions with full transparency in a timely way. We most likely, most often that we see positive outcomes and optimal solutions arrived in APA. That's on the slide, Anand. Yeah.
No, thanks, Praneeth. I think taxpayers have to be ready, especially on these critical transactions, to have clear backup documentation. I think we should jump into specific countries now. And I would like to Praneeth to take up the first country, KSA APA regime.
Thanks, Anand. So I'll just highlight, as Mr. Kuldeep sir highlighted, the framework is same across the country. So it'll be better to highlight the carve-ins and carve-outs specific to country. Again, the APA was inducted starting from financial year 24 onwards, and early 2025 they came up with the AP detailed APA guidance note. That's where taxpayers started showing interest and started filing applications with ZATCA. They've started with unilateral applications as of now. In due course, once the system or the API team stabilizes in terms of effectiveness and efficiencies, they will start opening the bilateral applications. There is no filing fee, which is a good thing. And there is a threshold criteria, a transaction specific threshold criteria to make an application. Again, they can waive this threshold criteria based on the facts, especially if they see that they're complex cases and there's a lot of audit exposure where MNEs are proactively seeking certainty. And in terms of the API process flow, pre-filing is available, but it's on name basis only. You can't go with an anonymous application. And then the entire timelines from then on, be it reviewing the application within 90 days, timely site visits, calling for additional information, and timely code closures. I think the APA guidance note or the guidelines have issued by ZATCA. They've clearly laid this out so that the taxpayers can make an informed decision making before going into an APA. In terms of coverage, it's 3 years. Again, you can go for renewal for another 3 years. There is no rollback as of now. Now, once you have a signed agreement, you have annual compliance obligations like any country. Again, interesting stat here. Uh, Last month only we saw the first APA being concluded in ZATCA by the ZATCA, and as of now there are double-digit inventory of applications which are filed. And in the next couple of months, we foresee almost 10 plus applications being concluded because all are in the verge of negotiation and being signed off. So I think all in all, since there is a parallel transpricing audit going on KSA, we see taxpayers proactively gauging the TP audit exposures and filing these AP applications, because the average timeline what the ZATCA has promised them is 1 to 1.5 year, which is excellent timeline for any jurisdiction. Yeah.
Thanks, Praneeth.
So again, where the taxpayers are looking at is, are there any complex intercompany transactions? Yes, of course. KSA is one of the key jurisdictions for all the multinationals operating in Middle East because of the incentives or the ease of doing business that the kingdom is offering with their 2030 initiatives. Again, all the complex transactions, be it intangibles, intra-group services, which is more common because of their regional headquarter tax incentive, and also the financial transactions. So all these cases are open for APA certainty. Only one carve-out has been that they have explicitly mentioned you can't cover the profit attributions to PEs, which is a separate issue, which is more of an international tax, while TP can play a role in terms of profit attribution. As I said, stats are very encouraging. In fact, we have held one company file an application recently. So we look forward to conclude it in this average timeline of 1.5 year, given the trends we are seeing in the other applications. Yes, Anand.
Yeah, it's interesting because even in the morning we have got a couple of questions on the same theme. Now their question is, now we have filed, is still transfer pricing documentation still required after entering into an APA? Is what they think that once APA is filed, whatever the document we have submitted, that's enough for the next years, is what they wanted to understand. Any thoughts on that, Praneeth?
So let me answer that in two phases. Phase one, where you are making an application, the transferring documentation has utmost weightage, was you give a lot of scenario analysis in terms of comparables, methodologies, PLI, whatever you feel is right, not just from a compliance perspective, but more from a discussion negotiation, because a lot of this country's position saying that we create a lot of in-country value, uh, fostering the ecosystem within the jurisdictions. So all those pointers have to be captured, which might not be captured in your regular complaints documentation. So it's a more exhaustive business aligned documentation when you're filing. But again, once you have an agreement in place, okay, as Kuldeep sir highlighted, it's more of ticking the boxes whether you are adhering to all the critical assumptions. That can happen only if you capture everything in a TP documentation saying that we have consistent for our profile, consistent transactions, and whatever methodologies and the ranges that we have agreed in the API agreement, we are consistently applying. So all this form part of your annual compliance report, which every jurisdiction has an annual API compliance. So that will form part of your ACR compliance obligations. Yeah.
No, thank you, Praneeth. I think it's again important is just to have that consistency, I would say, as you mentioned, and also Mr. Kuldeep mentioned, to have the documentation in place. And if there is a restructuring, if there is something big change, I think that needs to be, reflected, and also, provide the documentation to the tax authority and see how it needs to be done. I think I'll quickly jump into the next one, my favorite country, the land of wine, to South Africa. Here, just from a practical experience perspective, always spending their time, what I have really stood out, especially on the South African Tax Authority SARS, is in terms of the depth of scrutiny, especially in the areas of intra-group services, commodities, and mining, because that's where the central structure in terms of headquarters structures across supporting the whole of Africa, and financial arrangements. And also the other one that we have seen is they have always gone ahead and opened the Pandora box of intermediate structures where South Africa is just there, but then you have a lot of management fee and then other structures that flow through Mauritius or other countries. They wanted to really have that clarity. So today we just wanted to quick highlight. It's still a pilot phase. The programming advancing, and again, it's a bilateral, so it's clear clarity in terms of application between two countries. They wanted to provide that, and it's codified under Chapter 7. So far we've been waiting for the final approval from the SARS to go ahead in terms of when the application and the formalities of it. In terms of the registration, if you look at it, it's only applicable for future tax periods, not permitted to prior tax periods ending within 180 days. Also, one interesting thing, again, one of the questions we got it during this webinar as well was, can a taxpayer apply for an APA while being under the TP audit for prior years? So I felt that's a very interesting question. I think again, South Africa in one of the restrictions, again, clearly answers that they don't allow you if it's already a TP audit is open for any of these clients on specific issues or specific transactions, those transactions you cannot highlight and apply. Again, we need to look at globally as well and see what are the best global practices. In terms of the validity, it's up to 5 years, and you can extend up to 3 years as well. And post negotiation, it's quite interesting is there's a clear discipline in terms of the timelines. They're very clear that the negotiation time period is 60 days. So any amendment or withdrawal is permitted within the 30 days of application. So we suggest as a GTPN, if the tax authorities, I think we need to be very clear on why we are doing the APA, what is the criticality of the transaction, do we have the relevant data to support this transaction, because in terms of timeline, it gets really important as a package how prepared you are to reach out and sit across the table to do the negotiation. And finally, the complaints reporting is filed within the 60 days at the end of the year end, and then any information request to be responded in 30 days. Again, breach or termination be notified within 30 days. Again, it's quite interesting to see also the fact that the timelines are quite strict. So as in all, overall, having that readiness is one thing is important. Now, moving on to the practicalities of it, I would say looking at the three pillars. One, what do you disclose in terms of a clear articulated business model, a detailed FAR analysis, and a consistent financial alignment. What you mention in your financial statements as your related party disclosures, what you file in your corporate tax returns, your transfer pricing form, and what you prepare your local file or master file, they should all have the same story. As Mr. Kuldeep raised out that it's about art, I think the painting should be consistent and the strokes should be consistent across all the documentation. And then finally, we do highlight certain industry specific risks in terms of commodities, in terms of shared service hubs. Again, in the practicality that we have seen being a centralized hub as South Africa, we also have seen from headquartered companies a lot of high level management fees is thrown in across to flow it across Africa and other hubs. I think the issue always comes is a substance, and it also always comes with whether you have a right documentation in place. I think that is one thing always we had an issue while discussing, and then audits also have seen in that same lines. And we already have a map procedure within the framework that we have, and taxpayers can balance that. But I feel it's a right time for South Africa. Ideally, 2021 was the first year they have released the guide, but it's been more than 5 years. We've been waiting. There are certain changes, discussions, and recently, I would say last year, they have worked with Tax Inspectors Without Borders to build the capacity building for the APA program within the SARS. I think probably it's just the time for them to start this work. So with this, I would leave the thoughts, and anyway, any questions you have on the South Africa, feel free to reach out and we are happy to support. Next, moving on, I would go into the next country, which is UAE's APA regime, and then I will leave the floor to Mr. Sarmad, our in-house expert, to take it on. Sarmad, the floor is yours.
Hi, everybody. You can hear me, right?
Absolutely clear.
Okay, wonderful. Thank you for inviting me on this panel. Very excited to be here. And, the UAE has a brand new APA regime, which is cause for a lot of excitement for us, at least. Just a little bit of background. So the statutory corporate income tax legislation was introduced in 2022. And as part of that legislation enactment, Article 59 basically prescribed the rights of a taxpayer to obtain an APA from the tax authority. However, the rule basically delegated the manner and procedure of applying for an APA to the tax authority, and it was only until recently, which was December 2025, that we got some guidance on the APA procedure from the tax authority. And they outlined a number of conditions for the APA, which were interesting, but at the same time they do make sense. So one of the conditions was that there is a minimum threshold, transaction threshold, that needs to be met before the APAs are even considered. So that threshold is 100 million dirham. Now, even if you're meeting that threshold, and this is what I want to clarify because I've had a lot of questions on this, even if you're meeting that threshold does not mean that you will automatically be given an audience to actually commence the procedure of an APA. APAs take a lot of time from the tax authority. Also, it's a very important capacity building mechanism because it's a brand new regime and they need to look at transactions that have more relevance for the economy at large and the type of transactions that we'll see, because the amount of time that they invest in it is something that they want to use for other APA applications. So they take APA applications on a case-by-case basis. They look at the complexity of the transaction. They look at the industry of the transaction. And, if they feel like it merits the investment of time from the FTA, then they will accept it. And at that point, you proceed to doing at that point, you can proceed to doing a formal sort of APA application and negotiation of the terms and so on and so forth. There is a fee attached to the APA, which is 30,000 dirham. So it's not cheap, but there is a pre-filing consultation that's available that is free. And, it's not required to proceed to the APA application stage, but I think if I was advising somebody, I would highly recommend it because, that gives you some certainty whether you even have a case that the FTA is interested in, right? So think of the APA as sort of applying to a semi-prestigious university, right? Like it's not guaranteed that you'll get it if you just show up and, meet, the revenue threshold. But and the APA, and I think there's a question on this is too. The APA is forward-looking. So you've had, I guess, since institution of the corporate tax, which is in 2022, and starting in 2023 when corporate income tax began to apply, you basically had years which you had no sort of APA coverage. But it is only now that APA coverage in the end of 2025 and 2026 has become available. So we're starting that process of getting, the ability to put APA applications to the FTA. However, the APAs will be forward-looking, so they're not retroactive, which is important. So if you think you have transactions that might have exposure, unfortunately, you cannot, hedge that exposure by way of getting an APA and then, retroactively applying it. So that is not available. And I think that's one of the questions that was in the chat. So other than that, it is, so there's the pre-filing timeline is roughly about 6 to 9 months. So, even the pre-filing process is, time consuming, but at the same time, I think it's recommended that you go through the pre-filing procedure just to not basically waste effort and money trying to pursue an APA and just make sure that the FTA is interested in actually receiving your application and deliberating over the terms and conditions, right? There was another question I see regarding the risk from in a specific to a country like Pakistan, which is where I'm from. So I'm just trying to see if I can maybe clarify what that question is. Like, yes, generally transactions that are happening with a counterparty in Pakistan, a subsidiary in Pakistan, there is a higher level of country risk for sure in terms of operations. So you see distributors making, higher margins than you would in highly developed economies. And the reason is because as a distributor or any core industry, even there are a number of infrastructure risks that need to be basically priced in to your products. And for that reason, definitely you see instances where distributors would make double-digit margins, where in developed markets you would not see it. So that you would see, but that's the case generally in all developing countries where the infrastructure risks are more prevalent, right? And also it's, there's less capital, so there's less competition, so that sort of drives up the profitability, right? So I would say that when you're trying to benchmark transactions in a country like Pakistan, for example, we would need to look at companies as comparables and similarly sort of infrastructure challenge jurisdictions in order to price properly. My apologies, we were talking about the UAE, pretty exciting regime. We're happy to help you out. It's new, and I think there is certainly a first mover advantage here because it's a new regime. They're also learning, and they might be open to receiving applications, especially around transactions that provide a lot of uncertainty in terms of characterization, right, including intangibles and even loans in some cases. So I'll stop
And
here.
yeah, no,
Pass it
thanks,
back.
Sarmad. Thanks, Sarmad. I think that's, and again, we just before we jump to India, we encourage to post more questions. And again, this is free consultation, so feel free to ask. You have all the experienced people on the panel. Feel free to ask questions. So what I'll do is quickly, Praneeth, maybe just set up on the India side, and then Mr. Kuldeep Sharma can provide his insights on the reforms in terms of the India regime and way forward as well. Over to you,
Sure,
Praneeth.
Anand. So I think last month we saw some exciting transpricing reforms, not only in APA but also Safe Harbour and year-end complaints and also domestic litigation. Specific to APA, what stands out is the timelines. They have highlighted the recommendatory timeline for unilateral APS as 1 year. In IT cases, they said we have to close the applications in 2 years. Traditionally, these timelines were somewhere between 3 to 5 years for unilateral and bilateral APAs. But this focused approach of closing the APAs in timely manner, of course, will save a lot of time and efforts because it should not be like a protracted domestic litigation again, where it goes on for 8 to 10 years, right? So if you can, if they can get a certainty in 1 2 years. I think it'll be very lucrative for large companies to go for an APA. And again, a couple of other reforms. They've set a flat filing fee, APA filing fee. Earlier, it was a slab rate where you'll have to look at the transaction volumes and you have to worry more if those quantums are changing in the APA years. Now they've kept it a flat rate. In terms of modified returns, earlier, only the party to the agreement, which is the taxpayer, was able to file a modified return to align your tax positions to the APA outcomes. Now they've opened it, given to the associated enterprises. Say, for example, if you have any royalty or intra-group fee payment or interest payment from India to overseas, the flip side non-resident who is also filing a tax return can now modify the tax return so that they can get a refund of any withholding taxes they would have paid, which is a very interesting thing. So that now it's more holistic, I would say. There's one interesting aspect here. I've mentioned that there are rationalized reforms on Safe Harbor. At the same time, we are seeing a lot of catching up happening on the APA. If you see the next slide, I'll just quickly highlight few interesting stats, and there's a tough question that I have for Kuldeep sir. I want his practical inputs on this. So if you see here, the number of API applications which are getting concluded year on year over the last 3 4 years, every year is topping the year before. And interestingly, on the last day of the recent financial year, there were the 30 40 applications being signed on one day. And more important thing is the number of bilateral applications which are being filed is also increasing. Almost 40% of total applications are bilateral for the last 3 years. And the treaty network partner number is also increasing, where bilaterals are opted, or almost 12 countries are touched, while India, US, Singapore, UK, and Japan have been frequent jurisdictions of these associated enterprises. Now, on the question that I want to ask, how again we have to step into the shoes of the taxpayers. You are on one side, you have Safe Harbor, which is more lucrative now, given that they have enhanced the threshold criteria. The margins are way better than what we are seeing in the domestic litigation trends, and also in the erstwhile Safe Harbor package. And also they extended the certainty to 5 years instead of making year on year. Now we have this on one side, and you also have APS, which kind of gives an insurance policy for straight 5 years, the option of rollback, and also a fast track renewal mechanism. Sir, how do you think a strategic decision has to go, whether you have to go with Safe Harbor or APA, especially in India context?
Yeah, thank you, Praneeth. This is quite challenging scenario. And I fully agree with you that only competition that APA faces is now from Safe Harbor. Otherwise, there is no other dispute prevention mechanism. And what Indian APA program has experienced is that if we go into the in-depth analysis of the APA report that was released by CBDT for financial year 24-25, you will find that out of the conclusions of 174 during the year, more than 50% were renewal cases. So, though it augurs well for the program that the old agreements, the applicants were satisfied with the regime, so they want to continue and they rolled over the application for future 5 years. But then, unfortunately, the time that was being taken to finish these renewal cases was more or less the same as for the new cases. So, this is why I believe that the program was stagnating. And if you see in that report, though a substantial number of cases were being closed within the first year itself, but there were about 25% to 30% of cases which were being concluded post the conclusion of the future 5 years. Now, what would a taxpayer gain? I mean, this again, this doesn't give a kind of a certainty to a taxpayer for as for the future 5 year is concerned, because the APA is happening post closure of the future 5 years. So this is why I think the government has come up with a very sensible guideline, because again the maximum number of transactions or APAs were happening for IT related transactions, and this they have tried to cover within the safe harbor, and they have enlarged the scope, they have enlarged the quantum involved, and they have again given them the equal benefit of 5 years as is available in the APA program. But then the safe harbor is limited to satisfaction of certain conditions. As you have yourself explained in the previous seminar, which we held in March, I mean, if there are multiple transactions, then one cannot go for safe harbor. And as you just said, if there is rollback of years involved, then one cannot go for safe harbor. Safe harbor will result in double taxation. So if you want to escape from that, you have to go necessarily to APS. So in my view, the sheen of APS will always remain, though for routine transactions, taxpayers have now an option to go for safe harbor.
Thank you, Mr. Kuldeep. Praneeth, any final thoughts on the India before we pick up few questions?
So I think the bottom line is there is no rigid go-to approach based on the transaction category or taxpayer size. You kind of have to evaluate all the routes, considering the cost-benefit analysis, and take an informed decision. Yeah, very well.
Yes, absolutely.
Yeah.
Absolutely. Absolutely. I agree.
Thanks, Praneeth, and thanks, Mr. Kuldeep. We have one question on the chat. If a matter is settled in APA, can the outcome serve as a persuasive evidence for previous year TP audits, which are not covered in the APA for UAE? I think I can just take this
Yeah.
up. For UAE, I think it's only prospective. There is no rollback available. So I don't think that kind of a it's mostly to do with the fact that whatever the evidence is there, it's only the roll forward and there is no roll backward for that.
Yeah,
I
just
w-
to add on from
Sorry.
a India standpoint, we have seen a lot of tribunal rulings where they have given extracts of the APA outcomes because they think that a lot of time and effort is already gone into detailed fact-finding exercise and optimal outcome is drawn. Definitely, they have persuasive value on the pending litigation before the domestic forums. Yeah.
No, no, absolutely, Praneeth. I think even the Middle East, considering it's a very new corporate tax regime, I think it's probably they look at the first 5 years and then the flexibility, and then probably from even case law perspective, it would take some time to build in. I absolutely agree with you on that.
Yeah.
From a paucity of time, we move into the last country. Sarmad, over to you on Maldives, and maybe Mr. Kuldeep to give you your experience also working in the Maldives. So maybe a remarks on that as well. Sarmad.
So, Mr. Kuldeep, with your permission, I'll just give a brief overview,
Yeah,
and
yeah,
then obviously
please,
you
please. Yeah,
worked,
please.
very comprehensively with the tax authority. So we'll leave it to you for your final comments. So, the Maldives APA regime is quite old. It was instituted in 2021, but there has not been a concluded APA as yet. So it's still very much in its fledgling stage. Now, the one thing I want to mention is that it's a pretty open APA regime, meaning that you have unilateral APAs, meaning only the Maldives tax authority, MIRA, is party to that arrangement. There's bilateral and also multilateral, meaning involving other countries. One thing that I forgot to mention with respect to the UAE APA, for those who may be interested, is that the UAE APA regime is only unilateral and domestic at this time, and they're going to phase it out eventually to cover multilateral and arrangements and bilateral arrangements, right? And you might wonder, what logic is there to allow for an APA that's purely domestic, given there's no tax differential. The reason is, the logic is rather that there's a lot of free zones in the UAE, and subject to the activity that you're doing is subject to zero corporate income tax. So that's why a unilateral domestic APA regime becomes very critical for a country like UAE. But at this point, it's purely a domestic mandate, and they're eventually going to expand it to multilateral bilateral. Sorry, I just wanted to mention it because it's a key point with respect to the UAE APA regime. Right now, switching back to Maldives. So, as we said, it's been in place for a number of years. Primarily, the economy centers around tourism and retail, and there has not been a single concluded APA. Now, importantly, it's both forward-looking, and they might also allow rollback on a case-by-case basis. But I will pass it on to Mr. Kuldeep, who has worked, very, integrally with the tax authority in developing some of their guidance. So over to you, Mr. Kuldeep.
Yeah, thank you, Sarmad, for the quick overall summary. That was very useful. I think the Maldives APA program is quite comprehensive, unlike that we see in the Middle East right from the very beginning. And one important aspect which I find in Maldives is that they also allow for PE related APAs. So I think this is a very useful regime, and if there is a possibility for applicants to probe sort of pursuing an APA in Maldives, then I think we are well placed to do that.
Thank you so much, Kuldeep. Sarmad, any final thoughts on the Maldives before we conclude and then give any final thoughts?
Yeah, I mean, I would just say that there isn't really a certainty in terms of what type of APA applications will be accepted, just given that you've not had, good history of concluding APA, and that's very important when you're thinking about companies that are trying to enter a particular jurisdiction, right? And that's where I think UAE has to show some evidence of actually concluding APAs, and which is why we talked about the first mover advantage. And I think there's a little bit of advantage that you have because UAE is trying to demonstrate that it's actually able to do APAs. And I think it's a good opportunity just from a UA point of view, right? But yeah, I mean, APAs take time, they're hard, you don't always get them. So, you have to have a good strategy around how you're going to position yourself for it, right?
Right. I think we are finally on the concluding remarks. So, if I have to put it that way, key strategic takeaways, the three things: being proactive, certainty in terms of how we need to understand again what is the maturity in the tax jurisdictions over the years. If it's in India, whether it's a very new country like UAE, which have just started. So, we need to understand the local nuances. We need to understand what kind of documentation is there, and sometimes the precedents help, sometimes you don't have precedents. So it's just important to see the what are the enforcement tight timelines and tightlines in terms of what do you have and how do you need to follow. And second, it's always important to take an advantage from an early engagement. So if you have an opportunity that you can do, if there are certain critical transactions that you need clarity, I think robust documentation, especially the FAR, which Mr. Kuldeep has clearly highlighted. And also it's quite interesting when he actually talked about the fact that to do the site visits, how important it is. One is writing something on the paper. Second is actually the substance that's happening. So that integrity between what's happening on the substance and then that come across the paper is also quite important. Substance and form. That's one thing that we need to look at it. And again, what I also feel that is so from the beginning, it's important to know what options do you have? Is APA is the only option, or do we have any other options from a dispute mechanism purpose? I think these are the practical things that we need to look at it. So we have few more minutes. I just wanted to go around the board. Everyone should get like 30 seconds to just give their final concluding remarks. Starting from Praneeth, Sarmad, and of course, final keynote by Mr. Kuldeep.
Yeah. So
Praneeth.
Anand, I'll take this 30 seconds or 1 minute to address a couple of questions in the chat box.
Mhm.
Because I think those are more important. There is one question whether variable royalty model is being accepted by India AP authorities. Of course, yes. Whenever you see IP pricing, the royalty rate is always variable, which is a percentage of sales, because there is a direct correlation between this IP exploitation and the revenues that are being generated by the licensee. But the nuances are in terms of whether it's just a standard percentage of royalty on sales, or is there any slab rate base. That's where the API benefit will come into play. They see a trend analysis. So they give a slab rate based. If your top line or a profitability, net profitability percentages are increasing, say 0 to 3 or 3 to 5 or 5 to 7, the percentage of royalty is also enhanced, say from 0 to 5, 0.5 to 1% or 1 to 1.5%, because you're offering more profits to tax, right? So they give this benefit of higher repatriation in terms of royalty charge. One more interesting thing is in one of the API that we have seen, especially in the earlier years, where there are no enough revenues or there are no revenues because royalty is plugged to sales, right? They've allowed a fixed flat royalty, fixed fee royalty in the last years or initial years where there are no sales. So again, they're more open-ended. You'll most likely get an optimal outcome based on the underlying facts. So that's on the royalty. There is again an interesting question whether there's interplay between APA and Pillar 2. The answer to this is there is no direct interplay. It's more of indirect or more nuanced. See, what APA does is it's about fair allocation of profits to jurisdictions where the value is created. Now, the intent of Pillar 2 is whether those profits are taxed enough. Okay. So, even though you have pricing certainty, you might still have tax cash outflows because of your jurisdictional ETR, the global income computation, and the jurisdiction-wise QDMDT rules and all that. So, I think tax authorities and even the taxpayers will give enough cognizance to Pillar 2 framework, especially for in-scope entities, even in the AP applications and the negotiations. Yeah.
Thanks, Praneeth, for answering those. Sarmad, over to you.
So I'll just take a minute to talk about the UAE regime. So as we already mentioned, it's brand new and they're looking to conclude APAs. At the moment, it is only unilateral and domestic, which means that the type of transactions that you will see will range from transactions between free zone and non-free zone companies. So free zone companies being subject to 0% income tax in some cases, and mainland companies being 9%. So there's that differential that need the taxpayers can have certainty over. Other than that, what I'm seeing a lot of is issues around connected person compensation. So you have a lot of sole proprietorship type structures, and you have connected persons drawing salaries that may seem questionable or may be subject to scrutiny. So the current regime, which is domestic, I think might be ideal for those sort of transactions as well. And I would say that go with the pre-filing application first and see the outcome of that, because it's free and it's available to you, and you might get lucky, so to speak, right? Just because it's a brand new regime and there's a first mover advantage, as Anand had said. So I think I'll conclude with that, and back to you, Anand.
Thanks, Sarmad. Mr. Kuldeep.
Yeah, thank you, Anand. Yeah, so one aspect, important aspect, which I would like to highlight in conclusion is confidentiality. Whatever documentation that taxpayer submits to APA authorities remains with them. Going by my Indian experience, there is a firewall between exchange of information between AP authorities and the field authorities. So no information gathered by AP authorities is passed on to the field authorities until unless there is no agreement, and in that situation maybe, but otherwise there is a firewall. Secondly, what I would say is that APAs provide a breathing space to the taxpayers as well. Going by my Indian experience as a transfer pricing officer, there were times when I used to do 100 tax audits in 1 year. Now in APAs, at least APA teams have 2 to 3 years to do 100 to 150 cases. So if taxpayers uh, are providing their information timely to the authorities, there is transparency, and the documentation is robust, as Anand has reiterated time and again. There can't be a situation where the agreement is saying something else, whereas the APA application is saying something else. So when all these things are in order, the APA team gets confidence into the particular case, and the cases get concluded in a very early manner. So with this, I would like to conclude my thought. One final thing. Uh, it is perceived that APAs are an expensive regime. I will not agree with that, uh, because the filing fee is not the intention of the government. They don't want to increase their revenue through collecting filing fee. Filing fee is, actually my experience also says, we did a analysis internally, that it is actually spent in the course of the APA proceedings itself. The actual target of the department or the tax authority is to collect revenue through that arises through the APA application, through the APA agreement. So I think taxpayers need not look at the filing fee as such. Rather than, they should concentrate on the benefit which they will achieve on getting the APA concluded. Thank you, Anand.
Thanks, Kuldeep, and thank you all. I think my final thoughts would be why GTPN for APAs, the expertise that we have, the strong cross-border capabilities, again, the global reach and local insight with our offices in UAE, India, UK, Brazil, South Africa, also the partners that we have across the globe. So we are here to support you, and in terms of not only planning perspective, also monitoring across the year, and of course on the compliance as well. So it's a holistic life cycle support that you get from us. And then whoever is required, who needs help, who wants to understand better, also work with in terms of the UAE Tax Authority in the initial meetings. We are here to support you. So with that, I think we close today. Thank you for all your time, and we will be also sharing the recording in our LinkedIn as well as our YouTube channels for you to subscribe. And then whoever is required, you can reach out to you. We can share this presentation as well. Have a wonderful evening. Take care, guys. Thank you for you all.
Anand.
Bye.
Bye.
Thanks, everyone.
Thank you, guys.
Bye.
Bye.
Bye.